as we look ahead to jobs week this week and how all of this translates to what the Fed is watching as we get closer to the June 12th date. Good afternoon. So jobs have now kind of moved to the center focus for the markets ahead of the non-farm payrolls number that we get tomorrow on Friday. And we have a great question of the week from Julie, basically touching on what to consider if you're moving states in retirement. My name is Brandon Steele, financial advisor with Mainsail Financial Group here in Bellevue. And our goal every Thursday is to bring to you the market news, the data, the trends that we're watching, hopefully weed out a bit of the noise along the way. And I will share that this week is full of data, and we still have more to come tomorrow, of course, as we have non-farm payrolls. Before we get in what actually transpired in this calendar week, I do want to touch on what we missed last Friday. And that was really around income, spending, and inflation. So last Friday, we had all three of those data points come out. What I'll share maybe is the summary version. The first, of course, is income. So personal income was up 0.3%, basically in line with expectations. Not a lot to worry about here or think about here. Second was consumer spending. Consumer spending was up 0.2%, which was less than expected. And I will come back to why that matters here in a minute. And then third, we had inflation. We had PCE inflation data come out and basically in line with expectations. The headline number was up 0.3%. The core number, so again, take out food and energy, was up 0.2%, showing yet again that inflation is sticky. So I won't spend too much time on that today, but obviously this is really important as we look ahead to jobs week this week and how all of this kind of translates to what the Fed is watching as we get closer to the June 12th date for next Wednesday. All right, so let's talk about this week, and then I'll come back to how consumer spending factors into all this as well. So far this week, we've started off jobs week. And again, we have the big one to come on Friday, but nonetheless, so far on Tuesday, we had JOLTS job openings data. And I will share that the job openings number dropped to just over 8 million. But I do want to really highlight, so this was a big drop from last month and certainly a big drop from where we were about a year ago. But keep in mind, 8.1 million job openings is still a huge number. Now, to be fair, again, it is down significantly. And the reason that this is so important, it has moved markets quite a bit, especially interest rate markets, is because you may remember from the last Fed meeting, all of a sudden, the jobs data and the jobs market is kind of the focal point, or another focal point, I should share, of the Fed. Certainly looks like maybe looking for a reason to cut, but nonetheless, jobs are now another area that we need to really consider outside of just inflation for what the Fed may do ahead. And so we saw the bond market really react to this data point. Interest rates dropped pretty significantly there on Tuesday. And then going into yesterday, we also had ADP employment, which showed less jobs added as well compared to what was expected. So yet again, yields were down a little bit there yesterday as well. And again, the reason this is so important is because number one, the Fed meeting coming up next week is obviously going to be a bit of a sign of where markets may go from here. But maybe more importantly is that, when the Fed shared this last meeting, it could potentially highlight, some cracks that maybe are starting to form. And I'm just going to tie in jobs and consumer spending into this together because possibly the consumer, might be starting to run into some challenges. Now, it's been the shining light through all of the stuff we've been dealing with in the markets here over the past couple of years. But, is this the first sign of maybe a weakening consumer with, maybe jobs being harder to obtain and, spending in this example coming down a little bit? We will see. But I will share that the real test is tomorrow. It's the non-farm payrolls number that we get tomorrow. And that will really be a nice kind of teaser into next week where we get CPI data right before the press conference, and then PPI data as well. But obviously on top of that, we'll be talking about the Fed and kind of what they share there too. Before we break for the week, we have a great question from Julie. And the question is really what to watch out for if you're moving states in retirement. And I will share that there is a lot to consider if you are going to move states, but I'm going to highlight maybe the top 5 that might be top of mind here when you are considering a move or staying, I guess, in retirement as well. And it's probably no surprise, a lot of these are going to be based around taxes. But before I get into the tax side of things, I want to highlight the first, of course, is cost of living, right? That's obviously a big consideration for us. A lot of the reason that clients might move is is the cost of living. We live in a very expensive area here in the Bellevue, Seattle area. Some clients may move to another state with lower cost of living to just kind of take a little bit of pressure off, or find some sun, or both. Second, though, is state income taxes. So this is a really important consideration as well. Here in Washington State, we do not have an income tax, but obviously many states do. And so we want to make sure that, if you are moving states, this may not be a reason to move or not move, but you just want to be aware if they do have an income tax and how that might impact your retirement moving forward, or any strategies you might want to consider given that additional tax that could be on the horizon. Third is estate taxes. So estate taxes, or death taxes, or inheritance tax, depending on what they call them by the state. This one is really important as well. Essentially, what this says is if you pass away with assets above a certain threshold, a lot of states may have a tax on dollars above that, in addition to the federal tax that maybe we're all a little more familiar with. Here in Washington State, we do have one, just for those who are more local. But nonetheless, whether you're Washington State or elsewhere, or considering a move to Washington State or elsewhere, the estate taxes are really important to pay attention to, because they can be pretty steep, and certainly could have an impact on your plans for maybe beneficiaries or family members. Next, we'll cover sales tax, or maybe I want to highlight, although this isn't technically a sales tax, I'll highlight gas taxes as well. So obviously, a lot of states may have higher or lower sales taxes, but also gas taxes. Right here in Washington, for instance, at the pump, we're paying over $5 these days. A lot of that has to do with some of the transportation, but also the tax costs. So again, not a reason to move or not move, but definitely something to keep an eye on. And then lastly, I would share is the capital gains tax. So here in Washington State, we do have a capital gains tax for gains above 250. California, of course, has a capital gains tax. There are a few states out there that do as well. And, just something to keep in mind, especially if a lot of your investments are outside of the retirement system. This capital gains tax might be something to really keep a close eye on in terms of the impacts for your strategies as you move into retirement. So I hope that helps. I think it was a really good question. Again, the 5 things to consider: cost of living, state income taxes, state estate taxes, sales tax or gas taxes, and capital gains tax. Please do let us know if you have any questions. This was a great one, and appreciate Julie reaching out on this, but certainly if there's anything on your mind, let us know, and we'd be happy to try and address it here in our weekly updates. Have a great upcoming weekend. We have a lot to cover next week with inflation, PPI, CPI, and the Fed. But in the meantime, enjoy the sunshine here this weekend, and we'll see you next Thursday at 3.